You might be thinking about buying your first rental property. Congratulations! What does it mean? How do you do it? Let's find out. Whenever you're buying real estate, the very first thing you need to start with is your credit. Now, don't be afraid, but you are going to need to check that out. So if you haven't had a chance to look at your credit record recently, you might want to go to creditkarma.com and just pull your credit. You don't have to have a lender do it. Just get a peek at it yourself and you can actually give that credit report to a potential lender. Okay, so now let's assume that your credit is good. You're golden. You've got like a 740, 760 score at minimum, okay? And you've got a down payment, something in the 15 to 20% range. You're gonna need to have your tax returns in order, my friend. So if you have been self-employed, this gets a little bit trickier because you've got a lot of things that you're gonna need to deliver to the potential lender for them to check out. If you've been aggressive with your write-offs, that could work against you because you're not gonna show enough in your net in order to qualify for a loan. So if you made $150,000 last year, but you wrote off $130,000, that is going to be a problem when you go to get a home loan. So you may want to consider starting to retool how aggressively you write things off in anticipation of qualifying for a loan. Talk to a lender. Okay, so this is that moment, right? Now you've got all your ducks in a row, you've got the documentation, you have everything that you need to give to the lender so they can get a financial picture of where you're at. Be sure you talk to that lender and find out what you actually qualify for before you go shopping, because nothing sucks worse than going out and looking for a home and falling in love with that perfect rental property that you just know is going to be ideal for your investment portfolio, and you don't qualify for it. So make sure you get pre-approved first. Shopping! Yay! This is the fun part. Starting with online shopping is the best way to get a really good education in your mind, getting that mental picture of how much house you can get for how much money. Now, obviously, you're going to be looking at homes that are in your price range because you've already determined that from how much the lender will give you. But also, look at things that are not only in your price range, but also about 15 to 20% higher than your price range, so that you can really get a picture of the values of homes and what's included in them, so that you have a better idea when you actually go shopping, so you'll be able to spot a good deal and move on it. Anything can make a great investment as long as you get it at the right price. So you want to be sure to know what to look for. One of the key things you're going to want to know is how much does the rent go for in a given neighborhood. And the easiest way to find that out is to go to the usual places that all renters go to. Craigslist, apartments.com, Zillow, and so on. Put in the search criteria of the kind of home that you anticipate you're going to be buying. It's a 3-bedroom, 2-bath in this neighborhood, and see what are they renting for. Cash flow. Cash flow is what this whole thing is about, right? So basically, how you determine what your cash flow is based on what your expenses are versus how much you can get in rent. Your expenses are going to be pretty straightforward. Basically, you're looking at your mortgage payment, which is the principal plus interest, and you're going to need to pay your property taxes and insurance and maintenance. So make sure you factor all these things in, because you are not going to go mow that lawn over at that house, and you certainly don't want your tenant to have to do that, because they won't. And so you want to make sure and factor all these things in, and then once you have that number, then you take your rent number and you put it on top and you net it out, and you see, okay, every month I'm going to be ahead of the game by this much. That is your cash flow. Do you need to buy a home that's already turnkey condition? No, absolutely not. Older homes that are in need of some TLC and a little updating can actually be a great find. They are going to require a little bit more work on your part. You're going to have to invest some money and maybe roll up your sleeves and do a little work yourself. But don't pass over those homes that look a little tired, have the chip paint, maybe need the hardwood floors refinished, maybe have an older style kitchen. You don't have to spend a ton of money. You don't have to make it a model home. You just have to get it to the point where it's going to be in the running with the rest of the neighborhood, so that as tenants are going around shopping for properties in the area, your house holds up. Now you're ready to start making offers on homes. And the reason I say offers on homes is because you may need to make a lot of offers on a lot of homes in order for the numbers to make sense. And here's why. If you approach buying an investment property dispassionately, looking at the numbers, rather than approaching it the way that you would when you buy your own home that you live in, you're going to do so much better. It might seem like, oh, I really, really want this house. But believe me, if the numbers don't make sense, it just doesn't make sense. Inspections. Okay, so now you've got an accepted offer and you get to bring in your crew and start inspecting the place to find out what the deal is, like what's broken, what works, what needs updating, and so on and so on. And at this point, you really, again, have to engage that dispassionate mindset. If there's going to be a major repair, if the owner isn't going to cover it, then you're going to need to look at that. If the roof is really old and the owner says, well, but it would last another couple of years, well, that means in 2 years, you're going to have to replace it. So you need to take these things into consideration when you're working out the numbers. Closing costs. Okay, so it's about 1% of the purchase price. That's usually a pretty good rule of thumb. So if it's been a while since you've bought a home, maybe you bought your primary residence that you've lived in for forever, and you haven't been through this process in a while, just kind of keep in mind that it's about 1% of the total purchase price. Renovations. Now this is something I'm intimately familiar with. In fact, I was featured on the Discovery Channel flipping a house, and it was quite an adventure because what I learned very quickly is that when you hire a construction crew, you want to make sure to put performance clauses into your contract with your contractor. If they go past the date that they were supposed to have finished by, there have to be penalties. So make sure you look out for yourself in this process. I love contractors. They can do great work, and when you find a great one, they are worth their weight in gold. But they can get very busy, and so if you're not the squeaky wheel during the process, that can cause it to languish. But before that, just make sure it's in your contract, so that way they've got an incentive. It's going to cost them if they don't show up. It's time to rent it out. Yay! Okay, so this is the moment you've been waiting for, right? This is the point of the whole exercise. You're ready to actually put it out to market. Get good pictures. I know, you think you can get great pictures on your own, but chances are you probably can't. Maybe you can, but you probably can't. So, spend a little bit of money. At this point, why wouldn't you? Because let me tell you, when you have great pictures of your rental, it is going to rent much faster and probably at the actual rent that you want to get. Totally worth the investment. Okay, so now that you know a bit more about how to buy your first rental property, get out there and start looking.